Okay, we are back, and I just found out from Rita. She couldn't hear me. I swear, I kid you not. I think I just gave like the best ever introduction, and nobody could hear it. And by the time we get into it now, 7 minutes, everyone is off the live stream. So I don't know why I changed the settings, and I know I have to now check the settings literally every single day. Um, I use my computer for a lot of things, including message playing voicemails and Zoom calls. And I think when you start using it for different things, it changes it. I know. Thank you very much, Reed. I appreciate that. I just had such a good introduction. I don't want to repeat the whole introduction again, but I'll just sum it up by saying NASDAQ was down all day on the heels of an acquisition that Adobe made. The stock tanked today. I mean, it just absolutely tanked. And Adobe is one of the premier NASDAQ stocks. And it continues the drop in large cap tech that we've been seeing, like Netflix and NVIDIA and Meta. Meta is Facebook, by the way, if you didn't know. They changed their name. So continues to go on. The Dow was up a good chunk of the day, but gave up the ghost in the last hour, and it was justified, turns out, because FedEx, a major industrial company, came out. And not only did they pre-announce their earnings a week in advance for the last quarter and revenues, they withdrew financial guidance because the future to them is so murky that they can't even give a forecast. That scares investors. Investors hate that. Nothing is worse than low visibility and uncertainty to investors. So that does not bode well for the market tomorrow. It does not bode well for the economy. We've been talking about recession. I've been telling you that I think we're already in a recession. We continue to be one. The Federal Reserve went from being behind the curve in fighting inflation to all of a sudden getting ahead of the curve, it looks like. And now the Fed may overcook with interest rates. It might overdo it. And in any event, we spoke yesterday about the yields on the 1 year, which is like 3.9, and the 2 year 3.85. If you have cash that you're thinking about leaving in cash as part of your portfolio, and you're not going to touch it for a year or two, and you're concerned about not getting any yield, like there's no yield on money markets or savings accounts, you're seeing yields up a lot on short-term treasuries to the point where I want to be careful. I don't want to come off like I'm making a recommendation, but treasuries, short-term treasuries, are considered very safe, very stable, guaranteed, no loss of principal. You're getting really good yields on short-term treasuries that are 100% safe, and in every case I've seen, higher than CDs with the same maturity level. When you buy a CD, you're just letting the bank make money off you. You can buy the short-term treasuries now. It's very easy to buy a short-term treasury. There are minimums in some places, but I know with me, for example, I could really get anybody treasuries. Like it's not hard to do. You don't have to buy like $100,000 or $200,000 worth of treasuries every time you want to buy short-term treasuries. Okay, I could do it for smaller lots, and it's very easy for me to do. And we'll talk. I'll tell you how I do it. In any event, let's take a look at a couple of things. All right. I'm sorry about missing the intro. Rita, thank you so much for taking the time to let me know you can't hear me. Let's take a look at some of the big stories of the day first, okay? Got myself up here. All right. Adobe down over 16%, almost 17% on the day, and it's down in aftermarket trading, so no bounce. And Adobe is cut by more than half, and it's a pretty widely held stock, a very big stock in the NASDAQ and the S&P 500. And it just goes to show you that when these stocks go down, people say, they're down 10, 20%. It's a bargain now. You could buy it now on the cheap. There's really like no limit to how far a tech stock could go down. I'm not saying it's not a great company, but this is just, the situation we're in. Okay, I make this bigger so you can see it on your screen. All right, and then I want to take a look at FedEx. I called FedEx DedEx in the introduction here before. FedEx moved to cut costs, withdraws 2023 guidance after first quarter shipments disappoint. I cannot even tell you how seriously bad that is for investors. All right. That is just, it's like the worst thing to withdraw guidance for a company to do that. As a result, the stock is down $30, almost 15% in aftermarket trading. That is a shellacking of a major industrial company that has its pulse on the global economy because they ship goods worldwide. And when you see the transportation stocks starting to do poorly, they are considered a leading indicator of economic activity. This is really bad news. I'm not going to sugarcoat it for you. Okay, this is pretty bad. And down $31 now for a stock like for a stock like FedEx. That's like a stock you might feel comfortable buying. It's a good name. It's a good company. And the stock had bounced up a little bit, so people were buying it. Now people are walking around shell-shocked like, why didn't they tell us this a week ago? I could practically hear the paper shuffling for the lawyers to file a class action lawsuit against FedEx. And in like 10 years, somebody will get like a penny for it. The lawyers will get all the money, but that's besides the point. I just think it's buyer beware. You took the risk of investing. The Dow down 173 points. So the Dow is up a good chunk of the day. It was back and forth, but up a good chunk of the day. NASDAQ, we knew was going to be down from the get-go because of Adobe, and that was down over 1% all day. But at least we thought that the Dow had a shot to be up a little bit, maybe even the S&P. But nope. By the end of the day, nothing was holding up. Banks did okay, but not enough to overcome the rest of the market. And, here we are. With FedEx after the market closed, called DedEx for a while. Gold is below 1,700, down 35, and oil really tanked, almost down 4%, down to 85. The 10-year Treasury yield went up ever so slightly, and the VIX went up ever so slightly. Overall, I would say this is. I normally don't make a big deal about 173 points on the Dow or less than a 1% move to the downside on the major averages, although the S&P was down more than 1%. But following up on the heels of Tuesday's massive sell-off because of the hot inflation numbers, this just doesn't bode well. Investors are not finished selling, obviously, and now we really have to consider retesting the June lows, and we always have to reconsider testing new lows. But it really looks, in my opinion, very likely. I'd be surprised if we don't retest the June lows at this point. Let's take a look at bonds, treasuries in particular. All right. Here's what I'm talking about. The 1 year is 3.99%. So close enough to 4%. So if you have, cash in a money market or a savings account and you're not happy with the yield you're getting, what's wrong with 3.99% on a 1 year treasury, 1 year T-bill? It's pretty good. And if you're just going to leave it there. Now, if you need the money beforehand and interest rates keep going up, you could lose money if you sell before maturity. But if you're just going to leave the money there for a year and hold on to it, just not touch it, that's a good place to keep some of your liquid money in a stable investment like the Treasury. And Treasuries are the most liquid investments there are in the world, by the way, meaning they're the easiest to buy and sell. There's a huge market for these. It's the biggest market in the world is the U.S. Treasury market. Not the oil market, not the gold market, not the stock market. It's U.S. Treasuries. Okay, so the 2 year at 3.86, 3 year 3.8. The 10 year is only 3.449. It's really easy to envision the Fed raising rates. Next week, Tuesday and Wednesday, the Fed, 20th and 21st, the Fed's having their meeting, their interest rate policy setting meeting. And on Wednesday around 2:15, the Fed makes its statement, and it's expected that the Fed will raise the Fed funds rate, the rates that they control, by 75 basis points or 0.75%. So that puts upward pressure on short-term yields on instruments, on bonds, like when you're in 2 year Treasury securities. But the 10 year is not going up as much, and that's because investors are still concerned about slowing growth, possibly recession. Again, I think we're in a recession. It's just it's like it's very weird. We This is the first time I can ever remember in my life being in a recession, but it doesn't feel like a recession because recessions are marred by lots of foreclosures in the residential real estate. They're marred by substantially even lower stocks. We're kind of getting that. Another thing recessions are marred by is um, rising unemployment, which we're not getting. But we could get these, and I think that's the anticipation of investors, and that's why the 10-year Treasury is still not, uh, you know, moving up, and it's why it's still lower than the 2-year Treasury. Okay, usually a 10-year Treasury, because you're going out longer term, 10 years, the yield on that would be higher than the 2-year because you're only going out 2 years. But it's flipped, it's inverted. That's what we call it, an inverted yield curve. Let's take a look at crypto. There's a big merger with Ethereum and putting technology together in the crypto world to make crypto transactions 99% more efficient, faster, less energy, and just better. And people were expecting, I guess, crypto to go up, but crypto goes down. Bitcoin is under 20,000 again. Ether went in the toilet, down over 5%, down to 1,500. That was like over 4,000 not too long ago. Okay. Litecoin down. I don't really follow these that close. Doge down to 6 cents. Remember, Elon Musk touted it at 75 cents. Now it's at 6 cents. A lot of people lost a lot of money. Okay. And that's really the ball of wax today. Okay. I'm going to get going now, but I'm going to sum it up especially because the goddamn introduction didn't get caught on audio. All right. I'll sum it up by saying that we are still feeling the aftershocks of the higher than expected inflation numbers, the CPI, Consumer Price Index, that came out on Tuesday. Investors are assessing that if the Fed will raise rates higher and go on with raising rates for a longer period of time, stocks have to be revalued, and that means lower. And that's really the big thing that's going on. So I wish I had better news for you, but that's it. So I'm going to the Long Island Fight for Charity in a couple of minutes. It's one of the best events I go to every year. It hasn't happened for 3 years, so I'm excited. It's going to be about 1,500 people in a New York State sanctioned boxing match with business people like myself getting into a ring and fighting each other. No, I'm not doing it. I've been asked to be in the Fight for Charity. Everyone's asked to be in the Fight for Charity, but not really for me. And at the age of 55, I just don't think it's so healthy to get my head punched in a couple of times for any reason. So I'm going to skip it. I know, 55. I don't look it. I know. I thank you so much for saying that. And that's about it. I'll be back Monday. I don't do the live stream on Friday. I like to take that day off from the live stream unless something crazy happens in the market. So if you see me tomorrow, you'll know that it was a really messy, messed up, tough day in the market. So hopefully you don't see me tomorrow. Okay. But if you want to say hello, give me a call, shoot me a DM. I love hearing from you, and I'll speak to you very soon. Thank you for your time.